Yeah, we're not short anymore, so let's just be clear, we covered our shorts yesterday, but we had been short ahead of the result. Rationale, backdrop, oil prices last year. Structurally, they broke lower and it went down to 40, 50 bucks in December, they rallied back. Now, nearly all of if you think of the construct of how these LNG projects and that are built, is they all believed higher for longer for oil. And you're seeing a massive reassessment of the amount of oil out there. Now, how does that relate to LNG? They all have linked prices here. So you have a business that's committed to a capex cycle that's going ahead with that, despite the fact their underlying assumptions are changing on them, and you're getting this mismatch. Now, the company, we thought, basically wasn't fronting up to the reality that either there's going to be changes in their contract in the out years, that they don't think there is going to be, or perversely they might have to stump up more cash. Now, we think they need to do an equity raising. Now, Grant King yesterday said they don't. The market price action tells you the market believes they need to. So we think the equity market is going through a massive reassessment of the prospects of the earnings for this business. There's quality businesses and there's quality investments, and there's a big difference between the two of them. A quality business that has a lot of debt sitting over the top of it can make it a very bad investment. And the problem for Origin is they're going into peak capex on something they can't change their mind on largely, at the same time that those assumptions are changing. I think they had a quality business. I don't know if it still is a quality business. I think a large chunk of the move's done. This stock was trading at $10 just a couple of weeks ago. It's got down to the mid-8s. Before that it was at 12. So it's done a fair bit of move to realise the price of this. Probably goes into a sideways pattern from here. But that again is completely dependent on oil. If oil breaks to new lows of $30, the stock's going down. But assuming things don't change too much, it's probably in the price at this point. But we as a firm would probably use rallying opportunities to short more rather than buy stock. I think what's really interesting is spot oil prices back to where it was in January. Everyone knows that, well, most people know. What's interesting is the out years. So when everything fell in December and January, spot oil came down, but the out years all stayed at $60 or north. What you're now seeing is spot's gone back to 40 something dollars and the out years are down to 45, i.e. the market's telling you they keep pumping oil and there's plenty of it, and they don't believe they're going to slow down. So I don't think oil's going back anything above 55, 60 in the medium term. It's just there's too much supply. Iran, everything just keeps adding and adding and adding, and it's going and going. It's going to keep going until it breaks something, which is someone has to stop producing.